Alright guys, what's going on? My name is Austin, or as my Discord handle and Twitter handle would suggest, my name is Elliott. If you don't know who I am, which you probably don't, and that's okay, I am the head analyst over at OBR Investing LLC. I'll get more into what OBR is at the end of the video, but if you want to check us out right now, all the links will be down below to our Discord as well as our website and perhaps maybe some socials if I put them down there. I think I will. But yeah, let's hop into the video. So today we're going to be observing Bitcoin from a macro perspective on the Brave New Coin Liquid Index chart, right? The BLX chart on TradingView. And the reason why I utilize this chart is because it gives us a lot of price data, right? If you go look on a regular exchange chart like a Coinbase, a BTC USD chart from Coinbase, or Bitfinex, or any of these other exchanges, you'll see that the data is very limited and it starts in like 2014 or 2015. So this chart allows me to look at Bitcoin and actually see a lot of price action, right? A lot of price data dating back all the way to July of 2010. So it's very helpful for technical analysis on a macro scale, right? That's what we're doing today. We're doing a macro TA. We're observing the larger picture of Bitcoin, right? We're not looking at like a 1-day chart or like a 5-minute chart. We don't care what Bitcoin does tomorrow. We want to know where Bitcoin will top out this cycle and where we will be going. And that's what I'm going to help you with today. Of course, none of this is financial advice. This is just all my opinions, right? So without further ado, let's hop into it. So you're probably wondering, what are all these numbers and letters that I'm seeing around the chart? Well, that is something known as Elliott wave theory or Elliott wave principle. Elliott wave principle was created by Ralph Nelson Elliott in the early 1900s, and pretty much all it is a way of measuring social or crowd behavioral trends on charts, right, in a marketplace, right? So what you can do, if we go exit out here, I believe I have the link here. Yep, there we go. This is the basic pattern of Elliott wave, right? So pretty much all it is, it's a 5-wave move to the upside, where typically the third wave is more elongated than the first and the fifth, right? There's other rules like the fourth can't dip below the top of the first, and a bunch of other things when we go into corrective waves and Fibonacci levels and what have you. But I'm not here to bore you today. I'm just here to give you the simple idea that I'm trying to point out, right? So those are the numbers, and the letters are a corrective wave, right? So every time that you finish a 5-wave move, that you finish an impulse wave, typically it will be followed by some sort of corrective wave, right? And those are measured by letters. So now that we went over that, you can kind of understand what we're looking at when we look at this chart. So pretty much what I did is I measured it out. I charted the whole thing out from the earliest price data that I can get to the most current price data. And right now we are in the process of a very, very clear 5-wave move to the upside. You can see that our DeFi summer of 2019 was our first wave. The bottom of our second wave was the COVID capitulation in March of 2020. Then it followed by a huge run up to around our peak of $64,500. And this was the top of our third wave. You notice how this wave was more elongated than the first, right? And that's basic Elliott wave. And now we are, sure enough, going into a corrective wave into our fourth wave, right? So what does that mean? It means that we still have a 5th wave left to go. And so pretty much that's pretty much what I wanted to say, is that not a lot of people acknowledge Elliott wave, and we are in a very, very, very clear macro 5-wave move to the upside. So I am more than confident that Bitcoin will in some way or another gain that public euphoria back and really get the retail investor back involved, because that's when things start to get euphoric and price starts to really start pumping, right? So right now is by no means the worst time to buy. However, we still could very well go lower. And what I'm going to be doing today on top of the Elliott wave is I will be doing some Fibonacci extensions, right? If you don't know what Fibonacci extensions, retracements, or just Fibonacci in general is, it's pretty much based on the Fibonacci sequence based on, was it Leonardo Fibonacci? I don't even know his name. Let's find out. Hold on. Fibonacci sequence. Let's see here. I just don't want to mess it up. Leonardo Fibonacci. I was right. I second guessed myself too much. But yeah, so pretty much whenever you're looking for what price is going to do in when we're in like price discovery, or when price is coming down hard from something, you can look for support or resistance using Fibonacci extensions or retracements, right? And so that's what we're going to do today, and you're going to see some pretty amazing things. So when I apply a Fibonacci extension here, excuse like the cluster, I know it gets clustered when I take it off of the full screen, But if we apply a Fibonacci extension from swing high to swing low, from the 2017 peak of 20K to our bottom of 3K, we can see that we got denied right at our 0.168 our 1.618 Fibonacci level, right? And you can see right now we're actually riding on support on our, what is it right here, our 1.272 level, right? So pretty interesting that we are acknowledging all these things. And also, if you want to know, we also got rejected right at our 0.786 level during the DeFi summer of 2019, of the top of our first wave, right? So every single line that you see here is more or less serving as support or resistance in some kind of way, right? You can go and pause the video and look at, these lines and how they're serving as support or resistance, but it's truly remarkable how accurate and how helpful these things can be, right? So, this isn't enough data for me. So what do I do next? What I do is I'm going to fib cluster it. So when I say fib cluster it, what I mean is I'm going to add more fib extensions to the chart from different areas. So we're going to go back to a full screen here. I'm going to zoom out a little bit. And what we're going to do, we need to actually get our tool out. What we're going to do is we're going to add a fib extension from the top of our 2013 cycle top down to swing low. And we're going to bring her over here. And some pretty amazing things are about to happen. Okay, there we go. You can see that there is an area of concentration when we look at the chart, right? And where are those areas? Well, obviously, it's at 20K, right? It's at 20K, and we can see that that's a very significant level because we got topped out in 2017 there. And there is also a chance that our fourth wave comes down and tests it as support. Definitely a possibility, guys. It doesn't break any rules for Elliott wave. It doesn't mean that we're bearish in the macro term. It just means that the pullback could go back further, right? But where does that bring us here, right? You can see that the top of Bitcoin could have been rather easily predicted just by, utilizing these Fibonacci extensions, because you can see that we see a cluster right here of two lines that overlay each other. Typically, when they overlay each other, those lines of support or resistance will be much more stronger than other ones, right? So we can see that this $60,000, $63,000 area is very, very significant resistance for Bitcoin. So it will be very difficult for Bitcoin to get above that, right? But what else do we notice? Well, we notice that we get kind of populated up here around the $200,000 level. We also have an area around here around the $117,000, $114,000 level, right? So there are a lot of levels we can keep our eye on for where the fifth wave might finish, right? Personally, I think the fifth wave will either, we want to keep that there. Personally, I think the fifth wave will either complete at around $115,000, $115,000, or it could go up to $200,000 depending on when we complete, how long it takes, how long our accumulation phase is in this area. But I definitely think Bitcoin has another leg up in its market cycle. And, I really wouldn't sell your bags just yet, guys. Not financial advice, but don't let the FUD get to you. Don't let some guy on YouTube or Twitter, I know we're on YouTube right now, don't let some guy just tell you to go sell your bags because Bitcoin's going to zero, because I promise you it's not. This is just simple technical analysis, and right now we're just going through a corrective phase, right? Will we go down to 20K? It's definitely possible, right? Don't be surprised if Bitcoin goes down to 20K. I will be surprised if Bitcoin does dip below 20K, right? Maybe we wick down below it, perhaps. Maybe we don't go down there at all. Maybe we don't even break the 30K level with closes. But, it's definitely on the cards, so definitely pay attention to it. But it ultimately does not stop our destination of new all-time highs and over $100,000, right? Ultimately, I do believe strongly that Bitcoin will go over $100,000 in this market cycle. It'll just take a little bit longer than everybody thinks, and that's where we get to this, right? So let's move on over to this nice little chart that I have in the corner of the screen. And excuse me for not being perfect. I know I just put it on the Bitcoin chart, but this is as best as I can do, guys, right now. And I think it shows the information fairly well. So pretty much what this is it's separating from cycle bottom to cycle top. Each cycle that Bitcoin has had so far, the black being our current cycle. And as you can see, every single cycle that we have is getting more and more elongated in time, right? It's taking longer for Bitcoin to peak as cycles go on, right? We can see that from our first cycle. It pretty much just went completely parabolic, straight up. Our second cycle, again, it wasn't as parabolic. It wasn't somewhat initially, but it took us longer to get there, and we had some bumps along the way. Our third cycle, the 2017, was rather smooth, right? We didn't have any major corrections, but it did take us much longer from cycle bottom to cycle top to reach our peak. So that puts us here, right? We can only assume with the data points that we have that this market cycle will take a bit longer to reach the top, right? And we can see that we were outperforming our third cycle, and now we're going back down to where we probably should be, and that is underneath the third cycle, right? I don't think our return on investment is going to be higher than any of the previous market cycles. And as Bitcoin gets older, as cycles continue to go on, as decades move on, we will see this trend play out, and the ROI for Bitcoin will likely diminish, right? Because the bigger the rock is, the bigger the market cap is, the harder it is to move the asset, right? It takes a lot of liquidity, a lot of money to move Bitcoin, right? So the more money that is in Bitcoin, the harder it is to get a higher ROI, right? So what we can do here is we can maybe draw a line as to where, yeah, there we go. We want my brush tool. We can draw a line as to where we're going to go here. I think it'll probably look something like this right here, right? And, that might not be something that you guys want to see, but that would make the most sense if we're following these cycle trends that we're just, continuously having lower ROI and more elongated cycles, right? So this would totally make sense. And this also totally makes sense with the chart that we have here, right? We are definitely in a period, a corrective period, I guess you could say a consolidation period. And, we could definitely go and consolidate for a little while longer until we peak sometime in 2022 or 2023. We could go down to 20K, come back up, consolidate for a little bit, and then find our way back up. But, there's nothing technically indicating to us right now that Bitcoin is going to have some sort of V-shaped recovery, or that it's just going to pop right back up to where we were, right? There's no reason to be overly bullish on Bitcoin right now. If anything, right now, you should just be accumulating and just buying, dollar cost averaging into the market, right? Because anytime that you're in a corrective wave in a 5-wave move, that there is going to be higher highs. So I do think that there is a chance to definitely capitalize on Bitcoin and capitalize on altcoins, because as Bitcoin gets hit hard, pushed down harder, altcoins are going to get hit hard too. So, there's definitely some opportunities out there for you to make money. So yeah, I think Bitcoin will probably top out around, 128K to 200K in 2022 to 2023. So you heard it here first from your boy Austin, from your boy Elliott. I hope you enjoyed the video. I know if I talked too fast, if I was unclear about stuff, feel free to leave a comment. Feel free to correct me and let me know. It would really help. But yeah, definitely check out the links below. Check out OBR. Oh yeah, that reminds me. This is OBR, our beautiful website. Shout out to our developers who made this website. Shout out to Andy. He's the man. He's been working really hard on this website. And it looks great, right? We have our educational content you guys can come view. I do the cryptocurrency. I write the education myself. I just made one on staking. Every week there'll be new educational content added. And it's just a bunch of good stuff. Ton of great information you can find in here about staking. So definitely come check us out. All right, guys, that's going to be it. I appreciate you guys checking us out. See you in the next one. Peace.